London when we're doing this market update here at investingcube.com. If you're watching this live, please say hello in the chat box, and if you have any questions, you're most welcome to use the chat box as well. Let me just ensure that we are up and running. Yes, we are. Awesome. So good. So thanks so much for joining. We're going to take a look at the markets. There's some significant moves in the markets, and you probably know crude oil prices is what everybody's talking about, and also what a lot of people are talking about, how there's really not a big movement at all in currency pairs like the dollar CAD, which is a currency that should be gaining on the back of crude oil, or the fact that yen has barely strengthened, given the likelihood that we could have more risk between countries such as the US and Iran now, as unnamed officials, American officials, said that the missiles were probably not coming from the south. They're probably coming from places like Iraq, Northern Gulf, and potentially Iran. And I think as well, U.S. Secretary of State of America, Mike Pompeo as well. I think he was out, I think blaming the Iranians, I think it was, or alluding to it at least. So we're gonna look at that in a minute or so. And actually, let's begin with it actually, so we don't keep you guys waiting, because it will influence a lot of the stuff we're doing. So this is Brent crude. This is a CFD, so it's not the actual futures contracts, but it's derived on the back of the futures contract. It looks very similar to the continuous chart of the futures contract. So this is Brent crude, and Brent crude technically was within this triangle now, and the market, as you can see, gapped higher. There was no trading here, because people that were holding on to gold or crude, they're not going to sell you crude at 61 or 62 after such a significant event. They will sell it to you. They will hold off. And then someone, I guess, said, well, I'll sell you some gold, some crude at 67.17, at least according to this chart. But if you looked at some brokers, the difference between Friday's close and high was about 17%, which in this sense sort of leaves you up here. So it depends on which broker you're using. I do think as well that the price here from TradingView was delayed, and that's why it looks a bit different. What's interesting though here is the following, and that doesn't change depending on the data, and that is that we're within that triangle, or we were within that triangle, and now we're on the other side of the triangle, right? And you can take the base, which is from here. You can also take somewhere in the middle, which is somewhere here, and that's what I did. So if you take the difference from here to here is about $12.50. You put that from here, and you get that price target pattern of 75.21. Obviously, the likelihood of that playing out depends on numerous factors. One is how quickly Saudi Arabia is going to be able to bring back its production. As far as I understand it, they said days, but someone said weeks. Looking from pictures, not that I'm an expert, but it doesn't look good. Some of the pictures you can see floating around online, and I think personally it's probably gonna take a few more days before they can truly tell you how long time it's gonna take to rebuild things. And I think after they tell you that date, they're probably gonna delay it a bit more. It's so severe that the U.S. president said that they might release crude oil from their strategic reserves, and there's also talks that maybe OPEC countries will ramp up production to keep prices at bay. So it's going to be interesting to see, and again, it's going to be a lot of events coming out here. If we do have some comments from the kingdom, we could potentially see either bullish or bearish. But I can tell you like this, technically it's not really that difficult to figure out what may happen. Again, you have that triangle breakout, and we could easily have a bit of a correction. Sometimes the whole thing is gonna close the gap, and sometimes it doesn't. I think in these situations it might not close the whole gap, but I can also tell you as well, like buying up here, targeting that level, reward ratio is not that very good. I personally think the market could probably go down to this September 10th high, maybe a little bit lower. But I think, realistically from 63.72, which is what that high is, and maybe 60.12, between in this little spot here, I think people will be quite interested to go along. That will provide some sort of a risk reward ratio of, if we just hit the high here again, 1 to 12. If we go all the way up to target, you're looking at about risk reward ratio of 3.4. The reason why the risk reward ratio is not amazingly good, again, is because the best entry was pretty much down here, I guess. If you bought here, stops here, but no one, except the people that actually did the attack, knew that there were gonna be such an attack. So we can't really say or deal too much with that. Now this is the dollar CAD, and it's just one of the currencies that is interesting. I would encourage you to look around and look for currency pairs where maybe one could buy the Canadian dollar, where maybe one can buy the Norwegian kroner, or maybe one could buy the Russian ruble. Those are three good currency pairs to keep an eye on, but not necessarily here against the American dollar. The reason why it's not really that interesting right now is because the dollar CAD itself is within this major range, and people don't know for certain if crude oil prices will remain elevated at the current levels. But I will still look for currency pairs where there is an opportunity to buy maybe some Canadian dollars, or Norwegian kroner, or maybe Russian ruble. Here specifically, and we're going to limit our research to this currency pair here, a break to the upside could potentially trigger like a breakout of this triangle. It's a bit too early, but you're looking maybe at sort of 5% move, but we need to go all the way up here first. The alternative, which would be a bearish scenario, which will probably only happen if crude oil prices claw back all of its, gives up all of its losses or gains. For now, realistically, these two markets are going to continue to trade sideways. Another thing that is quite striking is just how the dollar yen has not been able to gain much more. I'm old enough to remember when crude oil prices were having this sort of move here, how that was going to hurt the economy. Obviously, we're not there just yet, right? I'm not saying we will be there, but the technicals do suggest we can go upwards, and when it goes quickly, people get a bit panicked. So I would argue that the yen should be strengthening more. So far, things are going in line with what I spoke about last week. So last week I said we're probably going to go up, and in the sell zone, people are going to start to sell. So the selling started already here at 108.24 on Friday. So that's much I was projecting. And I also said on Friday that people are probably going to buy here, and they bought here as well. I think now we're probably going to try to close this gap. This would not surprise me. The real test of crude oil prices are going to come when the American traders join in the morning, and like in a few hours. Are they going to suppress prices so we can retest that September high in crude oil prices? Then this is probably going to go all the way up. So to not complicate it too much, in the very short term, you're still dealing with an uptrend, all right? And this is the pullback. I think we can go up again, and we'll see how far, but we'll go up. But the likelihood of this market peaking here is rather high, I would say. And right now, the trend funding level is at 107.16. So people that bought here probably have stop loss orders down here. And when we go up, and if we do go up, most likely this double bottom is going to be the new trend funding level. What I'm waiting for right now is I'm just waiting for this market to roll over. So you have that downtrend, right? And now but in these moves to the upside, you always have short-term trends which are bullish, like this one here. And at one point, it will do like that. So what will happen at that point is that the short-term trend aligns itself with the overall trend. And you can see here that you need to focus on these lows, and that's what I'm doing right now. And we still have not traded lower yet, but that could happen on a break to 107.16, and I suspect following today's session on a break to 107.48. So we're looking for that, but we're still in that little process of going upwards. GBP versus the USD. So this trend is short-term bullish. I did do some changes to it though. Last week I said people probably gonna buy down here. We did not swing as low. You can clearly see now how this is an important level, which is 122.31. The price is going down lower, and I think people will probably buy if we go down to 23.75, and then they'll attack the highs again. Then, in much like with the dollar yen, you have a short-term move against an overall bearish outlook. The longer term trend defining level is this one up here, which is 27.86. That's an important high because that's an important high on the daily chart. It makes it more important than the shallow one here. Like if you look on the daily here, 22.31 is it's not an important low, and on the daily, 19.58 is an important low. So I think probably down, up, and then much like the dollar yen, this little short-term trend is gonna roll over. I've been in touch now with a few friends, and one guy actually that he projected Brexit. He said that a lot of his peers would vote on Brexit. This is back in 2016. I talked with this gentleman this morning, and he says that he doesn't really know, but he thinks actually that there has not been any seismic shift. He doesn't think there's been any major change amongst his peers, and he thinks that people will still be voting for the same outcome as we had today. So I think the risks are not necessarily over. What's going to be really interesting going forward is to see how Lib Dem perform in different pools. Lib Dem have now said that their mission is to revoke Brexit and Article 50. That means that if there is a general election, people can just vote for Lib Dem, and if they get a majority, they will just revoke it. Instead of voting for them and then them pitching a referendum, which has been the norm. So it's much different to Labour, which, as far as I understand it, wants to pitch for a referendum. I actually don't even know what they want to do. I think they want to pitch for a referendum and then do a pitch against it. At the same time, they're going to try to get a good deal. It's all a bit confusing. But Lib Dems now offer an opportunity, a clear exit, the same way as the Brexit Party also offers a clear exit. So in pools, you want to see how those two parties are doing going forward if we do have a general election, because I don't think we're going to have I think we will have general election, that sort of thing. If Boris Johnson pushed through and then gives us a no-deal Brexit, I'm not sure exactly how I know the market's going to collapse on that day if that happened, but I think he's just playing very tough, and I think in last minute there's going to be some last minute change, and there will be an extension. Okay, euro. So this is the euro. Okay, so euro is behaving, is sort of stuck around the median line. And if you just want to focus on the short term, I still insist that around this area, so around maybe 111, people probably going to be selling with stops above 111.67. You could as well, which is my preference really, ignore that high altogether and literally just sort of focus on maybe selling up here. That level right now is 111.95, and then maybe from these levels do something like that. That's actually my preference, to be selling at these levels. Sometimes though what happens is that the price gets stuck around these levels, so it just pushes back from the median line. How is this going to influence? Well, stronger Brent crude oil prices tend to actually lead to a stronger euro. So stronger commodity markets tend to lead to a weaker dollar. That tends to lift things here. But it's not 100% clear, really. And I think it's better to stick to the obvious cases, like maybe buying yens or maybe buying Canadian dollars, if possible, where the residual ratio and the technicals allow. Let's talk about commodities then. So this is gold. So gold has shown quite a lot of respect for 1484.95, and the market sort of moved upwards. I didn't put too much emphasis on this market, on this level, sorry. And I think the market will try to, the market is trying to bottom out here. And this is just a good residual ratio setup. This is what it is. I don't have too much trust in this lows, but realistically, if crude oil prices remain elevated, people will get scared. If suddenly there is some military activity, potential sort of attack against Iran or something like that, prices will go up. So risk will go up and this will remain supported. But here there is an opportunity if you wanted to buy at 14.98 with a stop just below. If we go up to the high, you get yourself a 3.79 risk reward ratio. So this is not that bad. And sometimes, well, actually what I do when the stop is like this, we're really close to the stop level, I don't do like a 1.5% risk. Then I do maybe 0.5%, or if I'm really comfortable, maybe 0.75, so 75 basis points. What happens is because the stop loss is so small, even if it's low risk, it's still worth it. Like if we go slightly upwards to make it really simple with the mathematics, if we go to the actual high, and if we risk 1% here, we'll make 4%. And if we risk 0.5%, we'll make 2%, which is not bad. So this is what I'm looking at. Now, if this level doesn't hold and we trade below it, you can probably guess yourself, people are going to get a bit of panic. They say, come on, like 5% of the world production is out. You know, there could be war. And they're going to be like very so disappointed. And I think at that point, take out the lows, probably trade a little bit lower. And then down here, I think the market is going to try to build the next bullish position. And that's what I would look for. Now, as for the German DAX, so German DAX is pulling back a bit, which is fully understandable. Firstly, the setup we talked about here, we reached a target already on Thursday last week, I think it was. Now we're very close to resistance. You're going to be buying up here after the news? Come on, people are not going to do that. That's why we're pulling back a bit. And we may actually obviously go upwards. What can that be? Well, if maybe the Saudis come out and say, guys, you know what, those pictures you're seeing, all those problems we're having, that's going to be easily resolved. And, you know, people should be comfortable with that. And then crude oil prices come all the way down. Then you probably see the German DAX straight sideways. But again, I don't think that's really likely. So I still think buying a dips down here, which we talked about already last week, is probably the preferred setup. As for the S&P as well, when very, very close to the high, and you know, isn't this typical? The markets goes all the way to the high, and then something like this happens, or something else happens, and suddenly the mood is like switch like that. So I think here, you know, we could stabilize. Maybe we'll take out the highs, but the odds are for price going up a bit, and then down, and then maybe down here, depending on how quickly this descent goes. People will probably be buying. If it goes slowly down, I think people might be buying. If it's big steps, big bearish steps lower, I think people might be a bit more worried and be more cautious about getting involved. Okay, I think we covered most markets. And we have Marvin here. Good morning to you, sir. And we have Asu as well. Good morning. So Asu is asking about Aussie dollar versus the New Zealand dollar. Let's take a look at that. So I haven't looked at this one for some time. So this is the Australian dollar versus the New Zealand dollar. Let's begin with the weekly chart. So the weekly chart shows that we bounce from support. You can see that the next major resistance levels is up here somewhere. If we flip to the daily, you can see that there's no pattern I can see. Yeah, there's no real pattern I can see here. I can of course see that we took out this level here, took out that high. The next high is up here somewhere, followed by this level here. You can see how the volatility here is very wide, so it goes up a lot, down a lot, up a lot. I think realistically here you probably need to have some pullback. It doesn't mean that it can't run away. It may be a switch, but I don't think that's going to happen. I still think the market will continue to be bullish. I think the market will continue to remain rather range bound. Maybe you can look something like the RSI as well. So the RSI tells you rather overbought now, but maybe if we go down, I don't know exactly how much, but I would usually not use the median line for something like this because it's way too short. But the median line is down here, and then you got the third fib down here, and that's that upper trend line. So maybe from down here, one could potentially look to rebuild the position. Yeah. In fact, according to the median line right now, we'll sort of have overbought levels, which is also confirmed by the RSI. But again, the market might go a little bit crazy. Not that I think it will do, but it could do. So probably down here somewhere, I would probably look to rebuild a long position and do like that. That's what I would be doing. Okay, I hope that helps you guys. We're gonna wrap things up. I want to thank you so much for watching. Don't forget to click on the link, and don't forget to hit that like button. Really, really important nowadays. Click on that one and let me know. To give you an idea how important it is, you see this article I published here got about 3,500 views. So what this is telling me is that I should be doing more articles and less videos. So unless you want to have more videos, help me grow this, which is the morning webinar. And one way you can do it is by doing with the webinar, by liking it. What I'm considering here is potentially reduce the amount of webinars to maybe 1 or twice a week, and then potentially just write articles, because it's all about reach many times. And again, it got about 3,500, 4,000 views on this article by itself. So the different ways of sharing information are competing with each other without any doubt. So if you like the videos and you like the webinars, don't forget to hit that like button. Okay guys, have a great day and an amazing day. If you have any questions to me, you're most welcome to reach out to me via Twitter. My handle is AlexFX00. I'll send you that as well. I strongly suggest you follow the ATFX, not the ATFX, the Investing Cube handle. It's this one here. In here, you'll receive a lot of updates, not just by me, but from the other team members as well. And then if you are into, let me see, I'm clicking the wrong buttons. If you're into Telegram, then we have that as well. So Telegram is like a WhatsApp. So you receive notifications every time we produce something. It looks a bit like Twitter. Let me show you how it looks like. So it looks like this, and you get a notification. You can of course switch them off. A cool thing is that when you click on it, it actually loads within the app. So it's like a mobile app pretty much from Investing Cube. Okay guys, have a brilliant day and happy trading, and I'll see you guys tomorrow, same time here on investingcube.com. Thanks so much, and bye bye. See you.